savings into an income stream with these new tools. This is Dateline July 2019 from CNBC. This looks interesting to me. I read a little bit of this article. I don't know anything about the tools necessarily, but if you're interested in them and you check them out, let me know what you think. A couple of guys I'm familiar with who have some of the tools that I like. So it was interesting. So let's go on this. When it comes to preparing for retirement, there's one key message: save, save, save. But once you finally do stop working, the last thing you want to do is spend, spend, spend. That's the behavioral economics that won Richard Thaler a Nobel Prize in economics. People are willing to spend on income. They're not willing to spend on principal. Withdrawal strategies, such as the 4% rule, which give an idea of how much you should take out per year, are a guide for how to stretch out that hard-earned nest egg. But when confronted on actually how to execute that plan, many retirees are flummoxed. That includes confusion as to how much they should withdraw and from which accounts to augment other sources of income, such as Social Security. If I went to you and said, hey, take out 4%, you're scratching your head like, okay, where do I withdraw from? Says Bill Meyer, who founded a founding principal of Social Security Solutions and CEO of Income Strategy out of Leawood, Kansas. Now, Meyer, and I don't know if they talk about Reichenstein, but they've written a lot of articles about Social Security planning in the Journal for Financial Planning. So Bill Reichenstein is a professor of finance, I think, at Baylor. I know it's at Baylor, maybe, I think it's finance. Professor of finance at Baylor. Bill Meyer, they co-partner on Social Security Solutions. I'm not sure if Meyer's a professor or not, I just don't know. But Reichenstein and Meyer have been writing about Social Security for many, many years to come. Many, many years ago, for sure, in the Journal for Financial Planning. So if Bill Meyer's on it, I'm interested. The good news is that new technology platforms are trying to help you answer that question. Meyer's latest product, Income Strategy, aims to help individuals decide which accounts they should take money from and when. And that sounds interesting to me, actually. For example, one withdrawal from your retirement account could impact both your Social Security taxes and what you pay for Medicare. Just varying which account you draw from can find tens of thousands of dollars more for someone, says Meyer. That's different from sequence traditionally firms use, which go for taxable accounts first, followed by tax-deferred and Roth accounts. I tell you, I know it, man. One of my pet peeves, my few pet peeves, but one of my pet peeves in Right Capital is they don't let you go from tax-deferred first. It comes out just like they say here, taxable, tax-deferred, Roth. They don't let you take from tax-deferred first, and then taxable, and then Roth. Now, there is a workaround. One of these days, I'll share it with you. It's not that hard to do. It's just I wish they just kind of do it as a default. But either way. On average, managing a withdrawal sequence correctly can make someone's money last for 7 years longer, says Meyer. Income Strategy also aims to set its product apart from competitors by developing similar platforms through the level of detail it considers. Once a user has inputted all their accounts, the site aims to make the process of withdrawals easy. A Get Cash button on the site allows you to input the amount you want to take out, say $40,000 for the next 3 months, and you will be presented with a list of what you should sell. This is Walmart, Clear America, Peach Nectar. Oh, man, this stuff is good. Lots of vitamins, no sugar. Got aspartame, whatever it's called, which for low carb is a good, you want the aspartame, whatever it's called. Low carb diet, aspartame is good. You want, there's another, what's not sucralose. Stevia is good too. Man, I meant to get some stevia. Okay. Anyway, for a subscription fee of $20 a month, you execute those transactions yourself. For $50 a month, you get access to a higher level of service where those transactions are done for you. There are also other perks, such as a mini call center with certified financial professionals available for advice and access to low-cost exchange trade funds. For $125, individuals can get a one-time advice session, which can be general overview or just on Social Security claim. That sounds pretty interesting. IncomeStrategy.com has officially begun in July of this past year and is aimed specifically at customers who may be reluctant to pay a professional advisor a 1% fee. I completely agree. I want it to be an alternative to advisors, says Meyer. Advisors are great, but a lot of people don't have advisors. Kinder is another platform that started earlier this year and aims to help you create a check you can count on in retirement. It was founded by Ryan Horgan and inspired by her personal experience in helping her father decide how to draw down his retirement assets. After spending hours poring over a 300-page Social Security books, she came to the conclusion on how to be a better way. To sign up, Individuals must complete a short questionnaire with basic financial information, such as how much is in pre-tax versus taxable accounts. Ultimately, once users have fully onboarded, the platform's goal is to help automate how much you take in from which accounts. Those checks, which the company sends you directly, augment the amount you receive from Social Security and annuities. Is a partner with American Equity to provide a custom annuity that requires 2 decisions from users if they want to buy it. Yeah, see, I don't like that, man. Someone had sent me something yesterday. I forgot it. It was this, you can see if your money's going to last, was done by an annuity provider. The whole thing was just about annuities. It was like, trying to get you to buy an annuity. I was like, I can't take it. And this is what this is going to be too. How an annuity fits, I don't know, but I presume how an annuity fits in your portfolio, what annuity can do for you and stuff like that. Stuff drives me crazy. They also partner with American, if they want to buy it and when to start receiving income, but the company has eliminated the commissions or brokers involved in any other annuity sales. Any other? So that means they're still in this. I would not. That doesn't sound appealing to me. And they charge a 50 basis fee on any assets of management. Yeah, so not a fan of that. I would go to. I would start with income. What's it called? Income strategy. Let's see. Let's take a look at what this looks like here. So let's take a gander, shall we? Incomestrategy.com. Guys, get rid of this thing. Doesn't look like it. All right. So I don't know why they make it. I don't know why they make you get you that pop-up if you don't want to do it. They should have it. I mean, I want to look at it before I sign up. See, that's stupid. I don't like that. So what they should do is there's Reichenstein. There you go, from Baylor. Yep. All right. So yeah, this is stupid. Look, man, they should not make you have to sign up for this thing. Is give your email before you can look at the software. That's stupid. They should allow you to look at the software a little bit and then sign up. What I have on Heritage Wealth Planning, let's see if it shows up. Heritage, is I have I'm not sure if it's going to show up or not. The pop-up comes up within, I think, 20 seconds or something like that. It might not because it does have cookies. And here's my recent article, Retirement Crisis Looms for Boomers. But basically, after you've been on here for 20 seconds, it pops up. And that's the way those guys should do it. That way you can say, I like this website. I'm willing to sign up for his. I find your ideas intriguing. I'd be interested in signing up for your newsletter. That's the way it should be. So maybe I'll read this here next article. Okay, so I did the cookies on here. So I've already been on this website today. That's why it's not showing up. But anyway. All right, so there you go. That's interesting to me. Incomestrategy.com. I would highly recommend you look into that for sure. So if you do, let me know what you think. All right, we'll see you.